Hello guys and welcome to another deep value video. Today we're going to deep dive into the financials of British American Tobacco, ticker symbol BTI. Let's start with a brief overview. British American Tobacco is a company operating in the cigarette industry. This company is known for Dunhill, Lucky Strike, Pall Mall, Kent and many others. As of the 16th of August 2024, its stock price stands at $46 and it has a market cap of 79.5 billion. Moving on to some key valuation metrics, the company's price to earnings ratio is 7.6, while its price to cash flow ratio is 6. Taking a closer look at the company's growth over the past 5 years, we can see that its revenue has grown by 2.7%, while its bottom line has increased by 44.2%. I chose to overlook the huge loss in 2023 because it was due to one-time write-off. So as you can see, in 2024 and 2025, their bottom line will recover. In terms of earnings per share, there has been a growth of 48.4%. However, it's also important to note the change in the number of common shares outstanding, which stands at 2.226 billion, reflecting a 2.8% drop. Additionally, the interest coverage ratio is 5.9, suggesting the company's ability to meet its interest obligations comfortably. Let's move on to the balance sheet, starting with the quick ratio, which is calculated by dividing current assets minus inventory by current liabilities. We see that it stands at 0.58. This ratio helps us understand the company's short-term liquidity position. Looking at the long-term debt-to-equity ratio, we find it at 0.6 and the overall debt-to-equity ratio at 1.19. Now let's transition to the cash flow statement. Cash from operations is 14.65 billion, reflecting a change over the first 5 years of 14.6%. Meanwhile, cash from investing activities is minus 377 million, showing a change of minus 65.5%. Furthermore, cash from financing activities is minus 11.87 billion and has changed by 4.3% over the same period. Lastly, free cash flow has grown by 19.3% during the same time, from 10.72 billion to 12.8 billion, and is projected to go down to 11.1 billion in fiscal year 2025. Moving forward, let's look at the return metrics to see how the company is utilizing its resources. The return on equity is 70%. The ROI is 7.25%, the ROA is 8%, and most importantly, ROIC, a crucial metric for understanding the effectiveness of the company's capital allocation, stands at 6.3%. Finally, let's find the acceptable buy price. The first method is conducting a discounted cash flow analysis. Basing a discount rate of 10%, a revenue growth rate of 2.25% for 10 years, and a perpetuity growth rate of 2%, we get a fair value of $56.28. I should mention that this growth rate includes their transition from cigarettes to vaping products. So their main business, the cigarettes business, will actually decrease in revenue, but I'm taking into account that the fact that their vaping side of the business is growing. Secondly, using a multiples valuation of 10 times trailing 12 months price to earnings, excluding the write-off, operating cash flow, and 12.5 times trailing 12 months free cash flow, we get a fair value of $54.67. Furtherly, the analyst price target is $40.68. Putting it all together, we get an intrinsic value of $50.54. And using a 50% margin of safety, we get an acceptable buy price of $42.96, suggesting that the stock at the current levels is undervalued. To wrap up my analysis, I rate British American Tobacco as a buy. Personally, I love this stock because it's a great value play. Besides being a great value play, in terms of principal gain, you also get a big fat dividend as well. I should mention that I own BTI and I plan to hold it until it reaches $50 to $55. Thank you for watching. If you found this video helpful, please like and subscribe for more deep value analysis. See you in the next video. Bye.